That Walgreens sounded so interesting, Ryan. Maybe you could elaborate on that a little bit.
It was actually a referral. So I had a broker out of California that her family member, I guess her husband, was in a partnership that he had inherited. And she was a residential broker down in California. She was trying to look for a broker that could help the partnership. So she looked at who was active in Pendleton specifically. And I'd sold a property there a number of years ago across the street called Melanie Square. Melanie Square was a Rite Aid anchored property. At that point in time, Rite Aid since vacated, but it was a Rite Aid. And now it's got a grocery outlet. It used to have a bowling alley, a bunch of other weird stuff. But she had come across just active commercial brokers that had done deals in that area. So she somehow found my name and reached out and said, I'd like to have a conversation about whether or not you could help our family. So I got brought into this conversation with her husband. Her husband was one piece of a 7-person and I guess 7 different individuals that have complete agreement on any path forward. So I went through and had to start helping them understand the problem they had. And really the catalyst and the reason they sold that property, and there was one other property that they had in their portfolio that helped them sell as well, which was far easier. And that was a single tenant Dollar General it's in Mississippi of all places. So actually the city of where Old Miss is located in Oxford, Mississippi. So we sold that one as well. But the Walgreens was the challenging one. And again, back to why they need to sell is they had in 2020 placed debt on these properties and they had rate resets. When they bought this Walgreens, it was Walgreens credit. It had, obviously a long-term lease. This thing's resetting and the interest rate environment is tremendously different. And the cash flow that they were receiving was being annihilated. So I said, we've got other issues with how our accountant had filed or not filed taxes in certain states over time. So we want to get all these things sold, bring them back to California with our proceeds. They're not even 1031ing. So I had to help them understand, number one, that the challenges they had. One of the interesting things I'm not sure that Ray touched on during your last conversation was Walgreens does have a sales reporting clause. So ultimately, as we touched on, there was no visibility to that Napa lease, which of course everybody calls and says, great, I like this cap rate at 10 cap, looks amazing. Of course it does. There aren't any 10 caps without a tremendous amount of risk. And the risk that we had with this one was we did not know what the underlying lease was. We even went so far as to track down the franchisee of this location, tried to say, hey, you have an opportunity to buy your own location, a heck of a deal. Just crickets, no response. So we realized we're going to get no information about their lease structure. But as I start peeling back the onions on the lease itself, there is a sales reporting clause within the Walgreens lease. So annually, you can request that they provide you all of the sales information for the prior 12 months. So I looked even deeper into that sales reporting clause, and it identifies that if there's any sublease tenants, that information is required to be provided as well. And that is where we had kind of the first, this is not going to be pretty moment in terms of the rent that we think they should be paying. And the reason I say that is that we knew the rent that Walgreens was paying was $350,000 per year. The sales that Napa reported in the prior 12 months, I don't remember the exact number, but it was like $720,000. So I start looking at that saying that is a broken rent to sales ratio. So we know they're not paying $350 a year. They can't afford it. When you've got a goods-based organization like that, you need to be south of 10% in terms of that rent to sales ratio to be in a position where you're making money. So we had to kind of then back into where we think they could afford to pay rent based on what their sales look like. So it was a fascinating project that I had to help the owners understand the problem they had and then get 7 people that didn't always see eye to eye all agree. So it was a hand-holding process, but it was something I really enjoyed. And I know that the owners were very thankful that I was the broker that was elected, or Ray and I were the brokers that were elected to help sell that asset for them.
Oh man, how on earth did you do that? That's one thing I've always admired about you, Ryan, is your ability to come in with a smooth style and get people to open up and talk and just listen to you and listen to your advice. That's like herding cats with a broom. How'd you get 7 family members to all see eye to eye?
Yeah, and it was not even just family members. And some of them were, had a stepped up basis because, a parent had passed away, they'd inherited it. So it wasn't even 7 people that were all close family members. So they didn't speak to each other on a regular basis. And then we had, as we went through and tried to figure out the right signature authority, like some were set up in trusts and somebody had a power of attorney, but you can't have a power of attorney within a trust to sign documents. So it had more iterations of just brain damage along the way. So number one is just over communicate. I think that in every transaction, over communication is the right approach. So letting every single one of them know what I'm working on, what the conversations are looking like. When we went live, we had a ton of people that told us, you're still crazy for thinking you're going to get 3.3 million. This 10 cap is still not worth it because we don't know what's happening with Napa. So we shared that information. And then ultimately, after the first couple of weeks, we had about 5 offers that came in. Several were right around our full price. So yeah, we're happy with the engagement, and we went back for a best and final, found a buyer that was willing to go non-refundable day one, hit the price that we were looking for. The sellers slowed the process. It should have been a 30-day close, but the way that the Walgreens lease is written is that they have an estoppel and they have 30 days to sit on it once you ask for the document. So we had to delay closing because of just the process with the tenant itself.
Wow. So when you entered into that relationship with them, what'd you get for a copy of the paperwork to start peeling all that back for the 7 different parties?
Yeah. Well, it was funny at first, the spouse of my original person I was contacted with or connected with, they were very reluctant to share anything because they were still going through the interview process. They're like, well, we've got this national credit tenant about this size of footprint. And it took me like all of 8 seconds to be like, I think you're probably talking about the Walgreens there in town. And she's like, wait, how did you figure that out? I'm like, well, you're talking about the footprint that's, kind of their standard footprint. You talked about the intersection, kind of general area in town it's located. I'm like, I sold the property across the street. If I'm wrong, let me know. But this is my, dart that I'm going to throw and see if that connects. And then they finally said, yes, it is Walgreens. And they gave me just like the snippets, screenshots of, here's this information. I'm like, these are all great. But if you want me to really do my job, I do need to have the full details of the lease agreement and whatever information you might have. I mean, I want to have, if they've got their old preliminary title report, I want to see what kind of easements we have on the property, because this was tucked behind a U.S. Cellular building that had some cross-access, even parking access, recordings. No, there's no such thing as a clean deal. And I typically gravitate towards those ones that are more difficult, as you know, Rene. So this was right up my alley.
Well, every year you and I compete head to head lovingly, but we compete for transaction of the year for Oregon CCIM chapter. I'm not even going to show up this year. I should just call in and say, just give Ryan.
No, and honestly, this one I wouldn't even submit for. This one wasn't difficult. It was fun. I mean, honestly, it didn't even take. I'll tell you, when we talk about that transaction of the year, we talk about what were the skills from a CCIM perspective that you brought to the table. And the only thing that was kind of a unique perspective that I wrestled with early on from that valuation standpoint was, we know that in 2033, when Walgreens, first of all, back up, Walgreens has a typical 70-year lease. First 20 years are their primary term, and then they have not options, but termination rights. So their first termination right is in 2033. So I said, well, there's no way they're going to exercise, or not exercise the termination right in 2033. So at that point in time, what do we perceive the rents for the market will be? I know that's a long ways out and we have to make a really wild guess, but let's say that right now Walgreens is paying $25 a square foot. If you were looking at 14,000 square feet, well located, it might be, especially based on the knowledge of what Napa was receiving for their total revenue, it might be in the $12 range. It might be in the $15 range. So we started modeling out saying, all right, at that future date, here's what we believe the value is at a 7 cap. And then between now and then, we have this, look at what the cash flow would be if somebody bought it at a 7 cap today on that lower rent. And then we have this excess cash flow of the 350 less what we think the market rate would be. And we're going to do a present value of that as well. So we kind of did a present value cash flow using a hurdle weight to figure out, based on future sales price, this extra cash flow, what does this do for a present value perspective? So that was the only thing that was kind of a CCIM, knowledge I tried to apply in this transaction. If I'm going to apply for a transaction year, it's going to have way more hair than that. And I've got, ultimately, I don't think I have one for this year. Next year, I've got one that I can already promise is going to be transaction of the year. I just worked on our 15th amendment yesterday on this transaction that went into contract in 2023.
Wow. You've been mentioning and hinting about that deal and just mentioning little tidbits. And I'm like, oh, that's deal of the year. That's just.
Well, what's funny, and I'll joke. So I've got another broker in my office, Carl Grending, and he and I last year, I think we were co-winners of the office transaction of the year for the tree farm transaction. And I'll tell you that I'm disappointed in the way that our chapter has decided to now, in my mind, have too many participation trophies on our transaction year word. I like the one transaction versus we're doing it for this property type and this property type and this property type and for leasing. And I'm like, come on. I like just head-to-head competition. And the other thing is I think will flatten the curve tremendously is that when I went through that process, and I've won 5 times, the brain damage that I went through by going and reevaluating all the email communication to make sure I didn't forget some of the storyline. Because, Rene, you've been involved in these deals that you're like, I've sometimes forgotten more of the brain damage along the way. And you had to go relive it when you're writing up that application. You're like, oh, I forgot about that piece. And it brings you back to that moment where it feels like an elephant stepping on your chest because you're like, that's when the deal died for the 7th time. And we somehow got out from under that foot and brought it back to life. So anyways, I love the competition though. I'm chasing your 6 trophies compared to my 5.
Well, that's okay. This year, I may just let you win it because you deserve it based on some of the deals that you're working on for sure. And I agree about the participation trophies. Let's just go head to head, have one, call it good. 1 sales and 1 leasing and call it good.
Completely. Every product class kind of goes through these ebbs and flows of being the sweetheart or the darling that everybody focuses on. And if you roll back the clock just a couple of years ago, there was this beating the drum of retail is dead, especially as we came out of the pandemic. They're like, well, people aren't going back to these stores anymore. And I think what has really happened is we've had a resurgence of trying to find that sense of place with retail. There's also in the last number of years, there's not been a tremendous amount of retail development compared to some of these other asset classes. So some have been overbuilt dramatically and retail has not been overbuilt, especially, used for our Portland metro area. It's almost impossible to find more areas to build your retail. We've got urban growth boundaries. We've got physical barriers with, mountains and rivers and all the other challenges. So retail, I think, still the fundamentals are very strong when you have the right kind of tenant mix that you're focused on. There can be bad retail, but the ones that probably 10 years ago, and I've been doing this now for 20 years, it used to be like neighborhood strip center. You're like, oh, the neighborhood strip center. But that's actually where you have your sense of place. It's where, my wife will get her nails done, or you're getting your hair done, or your local pizza parlor where you go to go see friends. So I think that those centers have had a resurgence of interest in the marketplace. So yeah, there are going to be areas where there's certainly some risk from a retail perspective, but I think that there's also great opportunities still within the retail sphere.
Ryan, I know it should be obvious, but what's happening trend-wise with like Rite Aid and Walgreens? Is it just because all of the online pharmacies like Amazon, where you can just get your drugs in the mail? When you and I first got in this business, everybody wanted Rite Aid because they considered it a coupon clipper.
Well, and it was one of these things, I think I'll use Walgreens as even a better example. It used to be kind of called the golden standard of these absolute net lease deals. And people would just crave them and pay ridiculously low cap rates because they're saying this is safety. I think there's a couple parts to that question. So, and I don't have all the answers. I'm not a stock analyst, but you can see that there's been, I think the pharmacy was obviously the anchor piece of that. But otherwise, when you walked into a Walgreens or a Rite Aid, it's really just a glorified massive 7-Eleven in my mind. It's, maybe if you need to pick up your prescription, the other stuff you're there for, do I go to buy my chips there or go buy a candy bar? No, that's not where I'm going. So I think that they had more space than they typically required. So we grew out of, 30 years ago, you go to your neighborhood pharmacy and it was just a small pharmacist, somebody that ran their own business. And then they went all public and corporate. And now there are these big behemoths that are seeing a tremendous amount of trouble. I mean, Rite Aid, they were just recently taken private by Sycamore Partners. So that had been at one point in time a publicly traded stock. Its value lost 80% of its value before Sycamore bought it. I think there's more pain to come. I mean, Sycamore does have a history of utilizing a Chapter 7 or Chapter 11 bankruptcy to potentially no longer or kind of purge some of the locations they're not happy with. So the storyline still's emerging, I think, from a Walgreens standpoint.
Wow, that is so interesting. Wow, that's just a mind blow. So talk to the audience about what you look for when you analyze a retail property when you're advising a client. What are some of the things that you want to make sure that a property has in order to kind of back it as an investment and tell your client, Absolutely. Yeah, I think this is a good deal?
Well, first of all, I don't think there's the same answer for every client. Everybody has different perceptions as to what they're looking for. Some clients might say, I want to go buy a single tenant asset. And then I'll ask why. or somebody says, I want to buy a multi-tenant asset, and I'll ask why. I want them to share with me a little bit about their vision as to why they feel that's a safe path. And then I want to be a sounding board to kind of just check to ensure we're all on the exact same page so I know where to aim when I'm presenting them opportunities. So for example, if I have a first-time investor coming and saying, hey, I've put a little bit of money together. I think I've got the ability to go buy a single tenant asset. I can go buy $2 million worth of real estate. A lot of brokers would say, great, I can find that for you. The first question I'm going to ask is, why would you want to put all your eggs in one basket for your first investment? A single tenant investment is a great deal for a lot of people, but I'd say that from a diversification standpoint for your first deal, that's a lot of eggs in one basket. Maybe we should look at something that has a multi-tenant structure or setup because you have a diversification of income. Now, if you told me that you got the interest in saying, I've got 2 or 3 single tenant assets already, and from that cash flow, I'm ready to buy another one, guess what? Having one more single tenant asset is diversification. But your first one, I want to make sure that we're all on the same page from what that risk profile looks like. So I want to ask a lot of questions to ensure that I'm pointing them in the right direction, because the answer is not always going to be the same, saying, here's the 1, 2, 3 things we need to look for on your property. If they describe to me and I say single tenant is exactly what the perfect fit, then I'll start looking at now what kind of a yield expectation you're looking for. Is this something you're comfortable with, short-term leases, long-term leases? What is your experience re-tenanting properties? Are you prepared to have a reserve for tenant improvements and for leasing commissions if this property does go vacant? So it's those probing questions to really understand what their experience is versus just trying to say, I already have the answer, trust me, just sign here. So I think that again, peel back the onion. And there's so many layers to a real estate transaction. I need to make sure we understand all the layers of that onion.
I received a offering memorandum today for a Dollar General, because a lot of people love those as coupon clippers. And it was a brand new Dollar General, just a regular, not one of the new supermarket brand prototypes, but a regular one. I can't remember what state it was, but brand new, fresh 15-year cut lease, and the cap rate was 7. And I was just a little shocked at how cap rates are bumping up. I realized that, interest rates really haven't dipped down, but I can remember when people were paying 5% for a cap rate for Dollar Generals all day. And it's just interesting to watch cap rates on triple net assets like that start to trend up. And yet in my local market for multifamily, things are still selling at like a 5.5 cap. And it's like, how can somebody buy something at a 5.5 cap and they have to borrow at 6 3/4? There's a disconnect there. So what are you seeing in retail?
Well, let's just dig into that Dollar General for a minute. So was that one of the 15-year flat leases on top of that? So you don't get a single rent bump until the end of the 15-year primary term?
I need to look at it. I haven't opened the offering memorandum yet, but it was from a pretty prominent Marcus and Millichap guy that sells a lot of them. So it probably is.
Yeah. So that's one of the things where when you're starting to do that kind of client intake questionnaire, it's, are you comfortable to not keep up with inflation? Because the next 15 years, your dollars are eroding. So are you comfortable with that 7% return? And you're right. They have gravitated upwards because I think people start to recognize that, especially Dollar Generals, they're a commodity. There are 20,000 Dollar Generals throughout our country. So they are truly a commodity and they need to be priced that way. So you're going to see a pretty small range that they trade within. And you can also, with the older ones, back in the day, they used to have double net leases. Then they realized their developers really wanted these absolute net leases. So it's important to understand what those structures of lease might look like in terms of how much work it's going to require from a landlord perspective, from any oversight. The thing I'll always guide people when they're buying those Dollar Generals is, even though it's an absolute net lease deal, go get your inspections done. Don't just trust that it was done right. And I would say that even once you own the asset, every couple of years, you want to head out there to make sure that tenant is taking care of it. I had a client that bought one down in Roswell, New Mexico. And when he bought the property, I said, here, what you want to do is every 2 to 3 years, I need you to go back down there, go spend time with the manager and see what's going well, what's not going well. Develop a relationship, because oftentimes they're not reporting sales, so you don't really know how they're doing. You might be able to get placer reports to figure out how many site visits are taking place and some things like that to get comfortable. But always try to find out what's going well or what's irritating them. And you'll also see how they're taking care of the building. Oftentimes those Dollar Generals are metal construction. It's not high quality construction. So when you're buying these things for a couple $100 a square foot, you want to make sure they never vacate. Keep them happy. And also towards the end of that lease duration, so year 13, if that roof is getting old, if it should be addressed, make sure it's done before you get a building that has been just completely depreciated and there's no value, or you're going to have to put in so much money to put a new HVAC and new roofing, redoing the parking lot. Making sure that you oversee your assets, it's critically important.
Yeah, that's really good advice. I bought one in 2022 and I have not visited it yet. It is in Illinois in the home of the albino squirrel. That's what the city is known for. So perhaps you'll be getting a coffee cup for Christmas, Ryan.
Oh my God.
So talk to us about Placer and what that software is.
Yeah. So Placer is a software, I guess it's a company that has an interesting data point they can provide. So I guess I'll back up to say where they're getting this data from. So I'm sure that you guys have smartphones that are sitting in your pocket or on the side of your desk right now. Now, the last time you downloaded an app and you went through all those terms and conditions and just scrolled to the bottom and said, yes, you probably said, track everything I do. Always know where I am. And so with that, Placer is partnered with various app developers so they can track exactly where you are. So Placer effectively is following us everywhere. And what they're doing is they will create geo boundaries around buildings. So if you wanted to use that Dollar General example, you can say in this Dollar General, they track and will say that there's been a site visit for I think it's 5 minutes. If you've been there for 5 minutes or more, they're saying you've visited that store. Now, it doesn't tell you what you bought. It doesn't tell you the sales, but you can now compare your specific Dollar General against the other 20,000 in the country, or the whatever number in the state of Illinois that your property is located in, or what's in the 15-mile radius. You can figure out how you're positioned. So it's extremely powerful to understand from a safety perspective that, hey, this Dollar General I'm looking at, it looks like it has more site visits than the other 10 in the trade area, or it's in the top 20% of the entire state. Now, it can also help you understand, is this an asset you might want to sell because you have a risk profile of every corporate company, when they've got locations. So it was just announced today that 7-Eleven is closing 500 locations, but they're going to open up another 500. You're always going to cull the bottom portion of your herd. So if you've got a poor performing location, Placer will help you as a landlord maybe see that before the corporation has said, we're just going to close this location. Because if you've got a vacant Dollar General and it's one of those small markets, it's incredibly difficult to backfill. There's not a lot of 10,000 square foot owner users that are excited to go buy it or pay what you might have paid for that asset.
Yep, that is very true. Is Placer a subscription service that you sign up for?
It is, yeah. And it's not cheap. That's the one thing. We've got a user in our office that uses it extensively, and it's very powerful data. So it's worth every penny. I think it will earn you listings if it's used correctly. Really, I have the daily notice of all new listings from both Crexi and LoopNet. So I look at anything that's retail in kind of Oregon and Washington. So I try to focus on the smaller stuff here regionally. Within SVN, I'm the product council chair for retail, and I've been doing that for about 10 years. So I get pulled into conversations on challenging assets all over the country. I've sold, mostly vacant malls before. I've been, challenged with other newer retail that maybe has distressed debt. So we get engaged by lenders to help cure some of the problems they have. So I've done that all over the country, but the majority of the stuff I try to focus on is here locally. As Rene knows, I run an office with SVN. I've got about 15 brokers in my office. So I've found over the last 7 or 8 years, I'm doing less day-to-day brokerage. I'm helping kind of grow the people around me. So we're building a very powerful team. A lot of people are CCIM. So one of the areas that I definitely get introduced to a lot of people that see the value in that education. So that's where my day is primarily consumed, but I'm still doing deals. I just make sure that when I'm working on stuff, I'm bringing somebody like a Ray or a Carl in on some of the existing relationships that I have to make sure that those clients get the full bandwidth they deserve.
If I remember right, during the last recession, didn't you take a vacant Walmart and turn it into like a go-kart facility in Bend or Redmond? Am I remembering that right?
Yeah, that was a property in Redmond. It wasn't turned into a go-kart site. It was actually, we had to change the entire zoning. So the challenge with that deal, now you're testing my memory banks. So that was a sales leaseback by Walmart. And Walmart, when they did it, put deed restrictions saying that no other grocer could operate in that building. So the bank that hired, so then what happened is that Walmart relocated, they built a super center, and the bank that lent to the borrower on that investment, he lost it to the bank. The bank was a local bank that I'd done a bunch of dispositions for during the last recession. And they said, Ryan, we've got a big challenge. How can we solve this? And we started peeling back the onion, and it was a hot mess. So I actually worked with Ken Streeter on that one, knowing that, I believe in partnering with a lot of people that are best in class, especially if it's an area that I'm not as familiar with. So this is in Redmond. Not my home base. Ken knew everybody in that community. He knew the right people to talk to from a political standpoint to see how we could change the zoning on that property. And it turned into a manufacturing facility. And that was a huge boom in terms of new, truly living wage employees for that community. So it was a huge win at the end of the day. I mean, it was a write down for the lender, and no question about it. But yeah, that was back to, it was a brain damage transaction that we had to look at this so many different ways and dissect it to figure out where can we find success.
Are you seeing a trend yet with bonus depreciation and double bonus and all that with manufacturing wanting to go in and build buildings? Are you seeing any of that in the Portland area at this point?
I've not been brought in anything where we're starting to focus on that yet. Not yet.
Yeah, same.
I know it's, it's part of that big, beautiful bill, but I think people are still trying to get their hands around that and figure out how they can use it to their best advantage.
Yeah, I would agree. Word in Eugene is we're getting an Amazon distribution center right next to the airport. There's a CCIM that you and I know, Ryan, and he had that listing back when he started to work for my husband and I in probably 2005. Okay. He's had that listing that long, and we're just now getting like an Amazon distribution center. So I'm kind of excited because I think I might get my Amazon deliveries in one day instead of having to wait 2 days.
It's all about you, Rene. Jeez, it's all about you,
I know, that's so true. But my point is, have you worked much on Amazon distributions or anything like that?
No, my team here in the office, we focus primarily on retail properties and a lot of multifamily. So from the industrial perspective, we're not trying to go swim in that pond where there's some people that have some really strong depth of, big developers we're working with. And we've done small deals, but nothing of that scope or scale.
Well, I really admire that about you, Ryan, and the fact that you just want to stay in your own lane and dominate it and be really good at it. What initially drew you to retail? Because tell the audience a little bit about your history, about your background, and just what brought you into retail.
For sure. So my path prior to real estate, my undergraduate degree was at Oregon State, studied business with a focus on finance. And I was very fortunate to be part of the college hire program directly into Tektronix, which is a super competitive group to become invited into. So I got very lucky. I should say, through a lot of hard work, I got lucky getting into that program as a recent graduate, and that was back in 1999. So I had a really great career at Xerox, and I guess to back up a little bit, I'll kind of tell a little deeper part of my history. So my sophomore year in college, it was the summer before my sophomore year, my dad had just lost his job in corporate America and said, Ryan, I can't afford to send you back to college. And I said, oh, well, that kind of sucks. So I stayed at home, and that summer I had been working at Circuit City selling stereos. So I love stereos. I love loud music, and it was perfect for me because it was sales. So I was like, this is really a lot of fun. So I ended up working at Circuit City through that fall term of my sophomore year. I didn't go back to Oregon State. I was able to save enough money to then be able to afford to pay for myself to finish that sophomore year. And then every summer, winter break, and spring break, when all my friends were doing cool things, I was working at Circuit City selling stereos to afford to go to college. Well, during that time when my dad was laid off, he got into commercial real estate, realized he never wanted to work for another big organization where he could be, let go at any point in time. So he started getting into commercial real estate. And by the time I graduated, he was able to start helping with a little bit of that cost in college again. So it was very nice. But when I graduated, got a great job, and he was harassing me virtually from day one saying, Ryan, your knowledge of numbers and your sales experience would be really great in this career path. And I'm like, Dad, I love you, but I would never work with you. It's just never going to happen. So it took about probably three and a half years of constant pestering And in 2004, my wife had just finished her second undergraduate degree in nursing, got a job, and it afforded me the opportunity to say, I'm going to roll the dice. And I'm doing very well in corporate America at that point in time, make six-figure career, 5 years out of college, I was doing phenomenally well. But I said, I think that there could be more. I think I should just roll the dice. And she's like, all right, I can support us. We'll have benefits. So it was perfect timing to say, I'm going to jump into this career path. Now, I'm the idiot that got there and said, Dad, I love you. I want nothing to do with you. So I decided to recreate the wheel. I could have tapped into his knowledge and chose not to. And I still kick myself for not engaging at an earlier date. But when I got there, and this was at Mark Smilchap, I was told, you will be selling multifamily. I knew nothing about multifamily. My dad was a retail guy. And I was like, all right, perfect. I'm going to start chasing multifamily investments. And somebody had called in to the general Marcus number, and it was somebody that they could tell, like, this guy's just going to kick tires and waste time. New guy, you can talk to this person. So I toured him to some different multifamily, and I realized I never want to step foot in a multifamily asset ever again. Like I felt like I need to take a shower. I knew that this was not going to be my happy place. So I walked in and told the regional manager, I'm like, I'm not doing multifamily. I know you need somebody to fill this void. It's not going to be me. I'm going to go chase retail properties. So I then focused on an area that my dad had not spent time at all, which was over in Clackamas County. We're West Side guys. We've got deep roots in Washington County from the 1850s here in Oregon. So my dad had focused kind of in that area, and I'm like, I'm going to recreate the wheel. So I then did the prospecting, I started in May of 2004, and that's right when the days started to get long. So it was like perfect. I'd every night go drive until, in the summer, 9:00 at night, taking photos of every single property before we had, great CoStar data and everything else that we have at our fingertips now. I pulled title reports and tracked down ownership information and just crushed the phones. Accepted a lot of rejection along the way, but at the same time, it allowed me within 2 years to be doing phenomenally well, making more money than I ever thought was possible, and knew it was the best move to jump into real estate ever. About a year after I joined my dad, we realized that the platform we were part of was not really one that aligned with our values, and then looked around for the right place to hang our shingle. I couldn't find the right culture that we were looking for, so he and I decided to open up an SVN. At that point in time, it was Sperry Van Ness. Buy our Sperry Van Ness franchise as co-owners 50-50, because my career was kind of taking off. My dad was slowing down. So for the next 7 or 8 years, we were just 50-50 partners in everything, with me doing 90% of the work. It was a great retirement program for him. So then I bought him out, and now I control the office, which is lovely.
Talk a little bit about the Sperry platform, because we do have commercial real estate brokers that listen to our show as well. And
sure.
They may not be familiar.
Well, first of all, I have to correct you. It's not the Sperry platform. So the reason we're no longer Sperry Van Ness is that the two founders went their separate ways. So Mark Van Ness is 100% owner of the SVN organization. And then Rand Sperry, he opened up his own brand called Sperry Commercial. So there's still brand confusion in the marketplace when people describe our company. So we've gone, like everybody else, to alphabet soup. It's SVN. And SVN is one of the most collaborative platforms you're going to find throughout the country. So we've got about 250 offices nationwide, close to 2,000 agents throughout that platform. And it's one that's just really about collaboration. We want to make sure that we are working with other brokers. We expose our listings right away, compared to a lot of our peers that will sit on inventory, try to see if they can double end it. Our guiding light is, we put our clients' interests above our own. So we're trying to always make sure that we maximize their value by getting this property sold for the most money in the shortest period of time possible. And that's through proactive cooperation and compensation for buy-side brokers. So it's a platform that when I started looking at, again, the things that aligned with my philosophy on, how we should treat our clients, it was it really resonated for me and Gary at the time. So we've been really happy. I just renewed for another 5 years with my franchise agreement. So it's a company I'm very proud to be a part of.
I know that was one of the reasons that I reached out to Ray and asked her to co-list a self-storage unit that I was rolling out to the market, because I wanted to have that national presence. And I could have used a service that would email blast out my flyer, but I really wanted somebody that was in the trenches, had the connections. And Ray said, yeah, we've got a self-storage council. I think, what do you guys have, like 30 people on that are spread out across the US? I mean, I was pretty impressed with that.
Yeah. No, I think that's really important. So there's, as I mentioned, I'm the product council chair for retail, and I've been doing that for about a decade, but we've got call it a dozen plus specialties, everything from golf courses to marinas to the obviously multifamily, industrial, office, hospitality. And what's really nice is that, I get phone calls from people throughout the organization on a regular basis saying, I'd love to just brainstorm with you. Like, how would you handle this type of situation? And that's where I really believe in giving back. I've gotten a lot out of this platform myself, created a lot of really strong friendships and relationships. So I do it just because I really believe in the platform and want to see other people succeed and have their careers take off. So it's a great fit for me.
Yeah, that's awesome. Well, also shout out to Ryan, because Ray and I worked on that transaction for like 60 days and we got right down to the closing, and the buyer had a problem with some CCNRs and that was not disclosed to us. Ryan called me from his houseboat that he had rented on Lake Shasta with his family, trying to help Ray and I troubleshoot our deal and save it. So shout out to Ryan, because not a lot of principal brokers would do that. They'd be like, hey, I'm out of the office. Good luck. God bless. And hopefully you'll close it. So,
yeah. I like the saying that somebody shared with me. I'm not going to take credit for it, but it was like, brokers only work about half the time. We just get to choose which 12 hours we pick. So I'll tell a funny story real quickly about right prior to the pandemic. My wife, I mentioned that she's a registered nurse. So she was recruited to take a management position right before the pandemic, which was the worst timing ever, because she was working tremendous hours, just because nurses weren't coming in. So she was doing bedside and management. It was chaos. But the best thing that ever happened was she made this comment. She was saying, as a nurse, I get to leave everything behind. Like, my shift is done after the 12 hours and I get to go home. As a manager, you don't get to turn off because there's always problems that you need to solve for. And she's like, I finally see why your brain never turns off, because you've got this stuff that's constant. And I said, this is the best thing that you could have ever seen, is that's how most people, when they've got a job that you can't just say, I'm done, I'm clocking out, how we're wired. And that certainly is the case with me in real estate, is it just doesn't turn off. So I like to make sure I'm supporting all the brokers, whether they're seasoned. I've got a broker that's been with me since 2007, maybe 8, top multifamily broker. And I still get phone calls, with the help me strategically figure out a solution to this problem. And I love being that sounding board. And I'll tell you, I'm not always right with my answers, but I'll say, you know what? I probably don't know the answer, but I have a way to find a way to get to that answer. And that's the same thing I think I'd encourage anybody to say to their clients. There's too many brokers who are yes men saying, oh, no, I can do that, when they really can't, or maybe don't have the skill set to do it. I'll be more honest saying, I can't do that, but I think I know a way that we can get there. So that honesty is something that just is integral in the way I'm wired.
Yeah. Shout out to Hugh Holtman. Now I know what his trade secret is. Here, he's told me that he's a good broker. He is a deal maker. So now I really know where the toolbox that he taps into. It's called Ryan's brain. Like, let's open it.
Yeah. And sometimes, I try to make sure that brokers know at the same time. You remember that old Staples commercial where it's like, where's the easy button? And they hit that red easy button. Sometimes as a principal broker, I feel like I'm that easy button, but I try to have a conversation about it. I'm like, I want to know, I want everybody to know that I'm here to be that resource, but let's strategically do the first couple iterations of thinking before you hit that red button saying, Ryan, here's what I need.
Yes. All right. I'm curious. What is the quirkiest thing that you've ever sold in retail?
Oh, let's see here. Well, I'll tell you about the deal that we're working on selling right now that might qualify.
Yeah.
So in Portland, Oregon, there is an iconic building known for it being the most graffitied building pretty much in all of Portland, right along I-84, called the Gordon's Fireplace Building, which is also known as the Aircraft Factory. Mm-hmm. So Carl and I are actually working on selling that property right now. And it's been one that's been a wild ride. We've been engaged on this one for a few years. The lender ended up having to foreclose on a developer. The developer bought it for about $2.7 million. Oh, back in 2017, 18, they had a vision of building this, mixed use asset, main floor retail with an office above it. And then the pandemic hit, so they had to go back and say, well, office isn't going to work. So let's figure out maybe it's multifamily over retail. Ultimately, the thing kind of unwound. They were foreclosed on by the lender, and now we are in the process of selling that property. It's going to auction in less than a month. So it's about 3 weeks out. I think it's the 15th of October that we'll be putting that through the auction blocks. But it's been a wild ride because everybody knows that building. Everybody wants to know the story. Our opening bid on that property is $225,000. They bought it for $2.7 million. Now, there is significant work that needs to be done, but I think it's going to be something where we're excited working with potential buyers that want to change kind of that neighborhood. I mean, this has been just an eyesore for so long. And it's a deal that I would tell you that the majority, 9 out of 10 times, I would say if this asset or anywhere else except for my backyard here in Portland, Oregon, I was like, I want nothing to do with it, but I care about our community and would love to see Portland have some positive wins. So we said, you know what? It's below our strike price for anything we should be working on, but we care. So we'll work on this asset.
Wow. Is that going through like the 10X auction platform?
We are using the 10X auction platform. Yeah. And we've used that a couple of times with success. So we're cautiously optimistic that we're going to find the right buyer that has a vision to bring this building back.
If you can, tell us who you think what would a buyer do with that building?
We've had a number of people say that are interested in buying it and knocking it down. And we've reminded them that this thing is on the National Historic Register. So it'll take an act of city council to approve removing it from the National Historic Register. And the likelihood of that happening in Portland, Oregon is very low. So it's going to be somebody that has to see some vision with the existing structure. I think that the latest plan is not a bad one. It's just right now construction costs make it problematic. So it's all about the basis you buy this thing for. And we're reiterating to people that the last time it sold was $2.7 million for a very similar condition. There's been, news reporters have come through this. We had Carl actually was on Channel 8, Channel 6, I can't remember, but Kyle Aboki, so we had that posted. So there's a ton of, I think, positive press out there. So we're optimistic we're going to find a buyer that sees the long-term vision of bringing this thing back to its former glory.
Wow, that's cool. Shout out to Carl for putting in the work.
Yeah, no, Carl's great. Like I said, we're very fortunate to have just top caliber brokers that somehow I've surrounded myself with. So I cannot complain.
Well, Ryan, what we'll do is we'll put your contact information in the show notes. What's one thing you would like the listeners to know about you or about retail in Portland? Because you and I both know that there's some great opportunities in your market. So if somebody's got some cash in their pocket, what's kind of a minimum threshold for somebody that wants to call and find out about retail in Portland?
Yeah, absolutely. And I will tell you that number kind of varies because it really depends on who I might bring on into that team that would help. I'm a big believer in, making sure there's multiple brokers working on projects. So you've got, one mind is not enough sometimes. We want multiple minds that are looking at creative ideas for transactions. So we and our team do everything from leasing. I've got young brokers that'll work on everything from, a couple thousand square feet for, first time tenants to brokers who would say, I'm not touching anything. We've got one multifamily broker that has defined that he won't touch anything under 35 units of a certain vintage, has been very laser focused to say, this is where I think I can really excel. So we really cover the gamut with, I think, the services we can provide. But what I would do is just say that if there's questions, we love to be a resource. We want to make sure that we peel back the layers of the onion. There's not one answer that's going to be provided to every single person we talk to because every person's unique. And we want to understand what your objectives might look like from an investment perspective and how we can help. So that's really, again, the guiding light. I want to put my client's interest above our own. How do we help them achieve some of those goals? And I think real estate can be a phenomenal tool for people to achieve those financial goals and freedom that they might be looking for.
Yeah, that's awesome. Ryan, thanks for being here. You've been a wealth of information. It's been a kick.